All right, hello everyone. This is Lindsay with LiveVox. Thanks for joining us a little bit early. I think we're going to give it another minute or two for people to dial in, but before we begin, I'll go ahead and do a quick sound check with all of our speakers. Joanne Needleman, are you out there?
I am. Thank you. Good to see you guys.
Perfect. Mr. Mark Malla.
Hi, Lindsay.
Hey, Mark. And finally, Jason Queener.
Hey, good afternoon, Lindsay.
Awesome. All right, thank you all again for joining early. Please sit tight and we will get started in about 60 seconds. All right, hello again, everyone. This is Lindsay with LiveVox. It is 1 p.m. Eastern time, so I think we'll go ahead and get started. Thank you all again for joining today's webinar, Cfpb Final Debt Collection Rules, Part 2, Insight from Legal Counsel and Operational Tips. I'm excited to be joined by a great panel of speakers, but before we begin, just want to go over a few quick housekeeping items. To the right of your screen, you should see a panel for questions. Please go ahead and enter in any that you have, and we'll try and get to them throughout the webinar or during our Q&A at the end. If we don't get to them, we'll be sure to follow up with you after the event. Also, this webinar is being recorded and will be sent out to all registrants after the event in case you'd like to share it with your colleagues. So with that, I'm going to go ahead and read off our very important legal disclaimer, and then I will kick it over to Mr. Mark Malla to get us started. So, this presentation and the statements of the panelists do not constitute legal advice. We urge businesses to consult with their own experienced legal counsel to independently review the topics covered on today's event and independently evaluate any compliance measures that you may choose to undertake. All right, Mark, are you out there? I'm going to kick it over to you to get us started. Dive in.
Great, thanks, Lindsay. Appreciate that. Appreciate you, as always, reading the disclaimer. Can't underestimate the value of that, as Joanne knows well. So first, I want to thank everybody for joining us here. We appreciate you participating in this, and hopefully we'll be able to give you something of value today. My name is Mark Malla. I'm the General Counsel for LiveVox. I've been at LiveVox for 10 years. At the company, I work on a lot of compliance matters, such as FCC and Cfpb issues. So, when these rules came out, this is obviously in LiveVox's wheelhouse. And I want to introduce our other panelists. Jason, if you can go first, and then Joanne.
Hey, good afternoon, everyone. For those of you that don't know me, my name is Jason Queener. I lead the business consulting team here at LiveVox. We partner with our prospects and clients to ensure they're getting the best KPIs out of the platform, and really, this is the CFPB and how to manage that from an operational perspective is really one of our key focuses right now.
Good afternoon. Thank you, Mark and Jason. My name is Joanne Needleman. I'm an attorney at Clark Hill PLC, where I lead their consumer financial services regulatory and compliance practice group. I've had the pleasure of working with Mark and his team for many years. It's a pleasure to be here today and to talk about these rules.
Great, thanks. So a little bit about LiveVox. So, LiveVox regularly monitors regulatory developments, such as these newly released CFPB rules. We also design, by the way, as you can tell, this is brief commercial. We design products and features to anticipate these compliance challenges and to address these compliance challenges. It's a big part of our company. It's something we talk about a lot as far as delivering, risk mitigation solutions and compliance-focused products to our customers. So definitely a big focus for us. Our platform is designed for the sort of multi-channel engagement that these CFPB rules contemplate. When I say multi-channel engagement, voice, SMS, email, chat, along those lines. And we help businesses with their multi-channel engagement strategies. You can see on the slide some of the key features. We have consent capture and revocation across all communication channels. We have do not contact settings, configurable contact limits. We talked about that in the prior webinar about call limits, and you can see some of these other things that we have on our platform. So certainly we're always happy to discuss our platform further with anybody who's interested. As far as the agenda goes, we'll give a little background by way of introduction. We'll go over the key elements of the new rules that just came out in December, and we'll have some suggested best practices and resource, as well as, time permitting, a bit of Q&A. So Lindsay, if you can advance the slide. Great. So by way of background, you probably remember, I think it was October 30th, maybe it was the 31st. I believe it was the 30th, right, Joanne?
It was the 30th.
October 30th, yes, for the first
right in
drop of the rules.
Halloween, right.
Okay. Sorry?
Right in advance of Halloween.
Yes, that's right. So the part one of the rules came out in October, and they addressed to a large extent contact limits. So when they dropped those rules in October, they said there will be additional rules that will come out in December. So the additional rules came out in December, on December 18th, and this is part two. So Joanne, maybe give us an overview of the difference between part one and part two, and what do these part two rules cover?
Sure. So part one, as you said, Mark, really had to do with communication, how debt collectors communicate with consumers. Part two focuses on really three key elements. The validation notice, which is really the main communication tool that every debt collector uses. I'm not quite sure why they had to put it in part two, but they did. But that really is, if you had to break it up, that's about 70% of part two really deals with the validation notice and what we're going to talk about today. The other part was time-barred debt, which we can go through very quickly because at the end of the day, the Bureau spent 5 or 6 or 7 years looking at time-barred debt, and at the end of the day, they didn't finalize any rules on time-barred debt, except to say that you cannot threaten or file a legal action on a debt that is time-barred. But there's no disclosures, there's no prohibitions against collecting on time-barred debt. The last element is this idea of what we call debt parking or credit reporting. And there are many agencies, I'm not sure many on this call engage in this type of practice, but it is a business model for a lot of smaller agencies and perhaps some debt buyers to purchase debt or to get assigned a small debt like a parking ticket and not really do any collection activity except to put the debt on a credit report. The Bureau now would like you to communicate with the consumer before you do that so that there are no surprises. We hear stories of consumers getting a mortgage or going to buy a car and all of a sudden the debt comes up on the credit report that they knew nothing about. So the Bureau addresses that. We're going to touch on it ever so slightly here. So those are the last three items that really round out the entire regulatory process of what we're going to see as debt collection, going into the future.
Okay, great. So we'll focus on the validation notice because it seems to be the most consequential of the rules that came out. So the question is, why should you care? Now, it's obvious for third-party collection agencies, you definitely should care because the FDCPA applies to third-party debt collection agencies, and these rules are part of the implementation of the FDCPA, so it explicitly applies to third-party debt collectors. So the question is, if you're not a third-party debt collector, then why should you care? Joanne, you want to walk us through that?
Sure. In the relationships that first parties, banks, financial institutions have with their third-party debt collectors. You already know that there is a level of oversight that you must maintain to ensure that these vendors are complying with federal and state law. So even though many on this call may not have to directly comply with what these rules say, you have to make sure the people you are doing business with do. And let me say we've had a lot of changes today. It's inauguration day. We have new administration. Many of you read there is going to be a new leader at the CFPB. We just found out about a half an hour ago that Director Kraninger, in fact, has resigned. And so there will be a new leader to the CFPB. The incoming leader comes from the FTC, worked at the CFPB when it started. He is very focused and understands the industry, and is also very focused on UDAP. And UDAP is the primary area where first parties need to be careful. Again, you may not need to comply with the FDCPA, but if what you're doing, even in debt collection, can be deemed unfair or deceptive to consumers, regulators will take notice, and that is applicable to both first and third parties. So it's really important to pay attention to this. As we talked about in the prior webinar, supervision and enforcement will remain active, have been active for the last 6 months, and again, with the change of administration, we expect it to be aggressive. This information should be very much a resource for those on the call, something hopefully you can keep going back to ensure that your vendors are complying in the right way.
Okay, great. Thanks, Joanne. Lindsay, if we can advance. Okay, so for the so let's get into the validation of debts overview. Joanne, I'm going to turn to you for this to walk us through, give us an overview and the elements that we've seen in these new rules.
Sure, thank you. We're going to try to streamline this. I will tell you, if any of you have looked at part 2 of the rule, it's very dense in the requirements. We're not going to throw a lot of statutory excerpts at you. We're going to try to provide some brief analysis and some brief summaries, but please always refer back to the rule for the exact statutory language. But generally, we all know on this call that there is a requirement under the FDCPA to send a notice to the consumer. Now, that notice can be orally, it can be in writing, but you have to provide information to the consumer about the debt. And it can be done, as I said, it can be on a phone call. If it is going to be in writing, it can be in an initial communication, which the majority of the industry does as soon as an account is onboarded. But if for some reason you haven't sent a written communication and you speak to the consumer within 5 days of that communication, it is mandatory to send at that time a written communication. I think what's important is to understand, and we saw this in part 1 of the rule, the Bureau has, and I think that this is a positive step, understood that we are in a time of when we can send information electronically. And the Bureau has blessed, in some ways, of sending this validation notice electronically. It can be done as an initial communication in the body of an email, or it can be within that 5 days. You will satisfy the writing requirement under the FDCPA if after 5 days of speaking or communicating with a consumer, you send that validation notice. If you do it in the latter example I just gave, you will have to get e-sign consent, because that is a mandatory aspect of the FDCPA, and that is where e-sign comes into play.
And can you just talk a little bit about e-sign? What does that involve?
So e-sign is a law that's from the early 90s that allows you to give force and effect of documents using an electronic signature. You don't have to have an actual physical signature. And it has allowed, you see it more, you don't see it as much in debt collection, but you see it a lot, certainly when if anyone has refinanced a house in the last year, all the documents you did and the DocuSigns that you signed are part of e-sign. But e-sign is a process where you have to make sure that the consumer gets certain disclosures, that you have the right technology, the consumer is given disclosures about opting out of using electronic signature. So it's complicated, and it's another level of operational functions that an agency has to do. Now, many banks and many on the call already have e-sign processes set up. That is basically integrated in the systems that you have. But third-party debt collectors, larger ones possibly use e-sign, but not necessarily. So I think that the Bureau, I think, was correct in not requiring e-sign if you are sending a validation notice electronically as a first communication. If you had to get e-sign to do that, I think it would discourage a lot of debt collectors from doing that, and I think that would have,
Right.
I think that would have been not a benefit to consumers at all.
Okay. All right, good. Lindsay, you want to advance to this next slide?
No, this is the correct slide.
Oh, this you want, sorry.
Yeah, go back, Lindsay.
That's
So again, 100634 is an extremely dense section of even the rule itself. There's about 300 pages of what we call the preamble, or the explanatory parts of why they arrived at the decisions that they did. So we're going to try to streamline it a little bit, but really the notice for validation of debts rule is broken up into 5 parts. There are the general requirements of sending a validation notice. We just talked about that. It's statutorily, it's mandated under the FDCPA. You can do it initially or within 5 days of the communication. Section B sets forth some of the definitions of what you need in a validation notice and the purpose of the validation notice. Obviously, it's to inform consumers and making sure that you are providing and giving the consumers the right information. Section C sets forth the validation information. So you have the notice, which is required under statute. Now the Bureau is both mandating and providing even some optional information that you can include in the validation notice, and goes through the definitions of what all of they are. We're going to look at some model forms and identify that for you. The second part is the requirements that not only if you send a validation notice that it must be clear and conspicuous, but the Bureau does provide a model form. Now, unlike the NPR and the initial proposals under this rule, the Bureau said that if you use their model form, you would have a safe harbor, period. Well, they pulled back on that. So the use of the model form now will provide you with a safe harbor for the information that you are required to put into the validation notice, and that notice was sent in a way that was clear and conspicuous. So if you use that form, you satisfy those requirements. The Bureau is giving you the option not to use the form, but use a form that is substantially similar. We'll talk about that in a minute. And the Bureau is providing some optional disclosures that you can use at your discretion. And if you use them, you would not run afoul as to the form and the clear and conspicuous standard. Finally, the Bureau touches on some translation options. If you tend to provide the validation notice in Spanish language or in another language, and we'll touch on those in a minute.
Right.
Joanne, before we go on, I
Jason.
know you're going to get into the forms and everything here, but
Yep.
2 things really stick out to me when we talk about these new requirements for notifications. And there's a lot to digest, I know, for everybody on the call, but the 2 things that stick out to me are, from a financial perspective and a customer experience perspective, it becomes much more powerful to capture that email consent from the customer. So you gave the example of, if you have a conversation with a customer, you have 5 days to give that notice. Of course, it's cheaper to send an email, but just the customer experience of saying, hang on, Mr. Smith, let me send you an email right now while we're on the phone so you have everything you need. It's just in my opinion, it becomes an operational opportunity to really build on that customer experience. So I know it's a little bit daunting and it's a lot to go through, but I think there's some really powerful opportunities here. And I want to echo the opportunities to capture and maintain consent with these customers as we go through these exercises.
Jason, I agree with you. And as we talked about even in the last webinar, many of the attendees on this webinar and the experiences that consumers had prior to having their account come to a debt collector were electronic. I mean, everybody communicates with their bank now through their online banking portal, or they email, or whatever app that they have, and you want that transition to be seamless. And it makes sense that if you're going to move from first party to third party, You don't want to just cut off that communication and start all of a sudden using snail mail. That's just not going to create, to your point, a good experience. And you're right. We talked a little bit about the Bureau in part 1 of the rule talked about 3 ways of which it wasn't necessarily caption consent, but ensuring that the email addresses that you're using are verified and accurate. And again, and one of the ways is to get it directly from the creditor. So that experience that the creditors had and all the communication what they had with the consumer, boy, wouldn't it be easy just to pass it along to the debt collector to keep that communication seamless.
Absolutely.
Yep.
Great. So you had mentioned a model form, and I think we're going to get into that a little bit.
Yes.
We'll go to the next slide.
Yes. So we have here on page 335 of the light reading we call as part 2 is the actual model form. It's called Model Form B1. And what we've done is we're going to show you successive, these are all the same model forms. We're going to highlight different sections of the form so that we can point out the different required and optional information that the Bureau would like you to put or mandates you to put in these forms. So the first one I want to talk about, which is to the left, I'm bad with my left and my right, to the left, is now the Bureau is requiring that you put a date on the letter, which they're calling the itemization date. Now, the itemization date can be the charge-off date, the statement date, the transaction date, a judgment date, or last payment date. You don't have to identify in the letter which date you chose, but internally, anytime you communicate with the consumer with regard to the debt and you're calculating what is owed, you have to consistently you have to pick that same itemization date. So that's what we show you here. You have to say to the consumer, as of January 2nd, you owe X, and then you need to break it down and show how you arrived at that amount. So that's a new and required item that you must put, a validation information that you must put in your notice. The second is, from the FDCPA, the language of 1692G says that your disclosure must say to the consumer, you have 30 days from the date of receipt of this letter to dispute the debt or ask for or make a dispute in writing and ask for the name of the original creditor. Now what the Bureau has done is require you to actually put a physical date on the letter of when the validation period expires. So what is that date? That date starts, or how do you calculate that date, I should say? That date starts that the day that you put either the letter in the mail or hit send, 30 days plus 5 business days thereafter. So on January 1st, if you put a validation notice in the mail or you send it by email, you would have until February 4th. That would be the validation end date that you must include in your validation notice. Now, let me point out, if for some reason you send a letter on January 1st and the consumer calls you and says on January 3rd and says, I got your letter today, that does not change the calculation. The calculation is based on the date that it is sent.
Great. Do you want to go through the key elements of the information that's required in the validation notice?
Sure. So as I said, I talked about the itemization date. We're going to get into the actual itemization of the debt. How do you calculate what the amount is owed? You must put information about consumer protection. Again, we saw that in the prior slide on the right-hand side. That would include the end date of the validation period end date and how to dispute the debt, and how you are now required to put the CFPB's website address or an address in which a consumer can write to the CFPB. So they wanted you to put that information and make it available to consumers. And then there's a section about how a consumer can respond to you with either disputing the debt or making a payment or asking for information about the original creditor. So if we go to the next slide, we can highlight those sections for you. Okay. One area I forgot to mention, and thank you, Lindsay, for popping this up. As we all know, there are something called the mini Miranda that you must put on letters. It says, I'm a debt collector. This information is an attempt to collect a debt, and any information obtained will be used for that purpose. So what's interesting in the validation in the model form is, while the rule requires you to put debt collector disclosures, which we assume are mini Miranda, the form that they have doesn't really have the mini Miranda. It's a variation of it. It's we are a debt collector. That's fine. We are trying to collect a debt that you owe to the Bank of Rockville. We will use any information you give us to help collect the debt. Well, that's not the saying that all of us have been saying in our communications and our phone calls and our emails for the past 25, 30 years. So it's interesting. We'll get into optional disclosures in a minute. I will tell you, you can either use this language that's in the model form. If you were to use the actual language of the mini Miranda, that would be fine. But you have to make that disclosure on the form.
So Joanne, I'm thinking for the folks on the call again, I know there's a lot on this form, and I wanted to kind of ask you, I know these rulings don't take effect until later in 2021, but this is going to be a bit of a heavy lift for folks. I mean, from a creditor perspective, making the assumption that you're using multiple vendors or multiple agencies out there, there has to be some continuity in this model form and the data elements that you're providing to your agencies to make sure that the right data is being presented across the board. So this is one of those things that just kind of sets off an alarm to me that says, hey, this is something that people should adopt early rather than kind of, this needs to be a priority in my mind, because there's a lot of data elements here that may not be shared right now.
I couldn't agree with you more. These are discussions you need to be having. If you're an agency, you need to be having with your clients. If you are a first party, you need to be having with your third party. Absolutely, because you don't, there's no standard of how information needs to be retained. Everybody is different. And again, it's sort of like putting a square peg into a round hole here. Everybody is going to have to streamline their information so it synthesizes with this form. We will talk a little bit. I am very hesitant and having a lot of conversations with people about this form, and I'm really hesitant to make recommendations to make super wholesale changes with this form. I just think it's dangerous because if you're sending out thousands upon thousands of forms and they're incorrect, I don't have to tell you what that outcome could be.
Yeah, and the other interesting thing I think that most folks on this call would agree with is that if this customer owes you a bill, they probably owe someone else, and them seeing discontinuity between different organizations is going to raise trouble for everyone.
Yes, absolutely, absolutely. All right, we talked about the disclosure. Obviously, you need to put the name of the debt collector, the name of the consumer. And as we see on the bottom to the left, this is the table that you are going to have to put in, which itemizes the debt, which calculates how you get to the amount that is owed as of the date that you send this letter. And that's another important topic. I mean, for many, interest is always accruing. In certain circumstances, interest is not accruing at all. So you're limited to what is being the amount and the amounts that you can put in here. And again, I would be very hesitant to change this form really dramatically if there are certain charges that are incurred that need to be disclosed to the consumer. You need to have a conversation with both the debt collector and the client about that.
So you're saying that if you're going to be careful before deviating from this model form.
I can't stress that enough.
Right.
Hey, Joanne, I'm sorry to jump in here again, but yeah, we have a few questions come in at the same time here that are really applicable to this topic. Sure. The question is whose responsibility is it to send this letter? Is it the original creditor or the agency that's being passed the debt?
As we said before, these rules are applicable to the FDCPA. The creditors are not required to comply with the FDCPA. However, let me complicate the matter more. Could a creditor who sends some kind of form like this that could be confusing or maybe deceptive, You may not violate the FDCPA, but a regulator can say, you know what, I think that's a UDAP. I think the way you've sent out that form and the way you've done it could potentially be a UDAP. So to answer the question, creditors are not responsible for sending out this notice. However, to your point, Jason, creditors do have a part in this process because they have to ensure that the information that they are giving to their debt collectors that will be put into this form is correct.
Right. So the form sort of doesn't apply.
Go ahead, Mark.
Sorry, no, you go, Jason. Go ahead, finish. Sorry.
No, that was it. Thanks.
Yeah. So basically, Joanne, it seems like the creditors are not required to comply with these rules, but if they don't comply, they can have exposure, or if their agencies don't comply,
that's right,
they will have exposure.
That's right.
So that gets back to the vendor management you talked about before.
That's right.
That's right. So definitely they have a vested interest in ensuring that their agencies are using this form, and if they're not using this form, then they're complying with a different form that they're using.
That's correct. That is correct.
Yeah.
All right, Lindsay, can you click on a couple more items that we can show the audience? All right, so this is the consumer protection section, as we talked about before. This is where you're going to put your dispute language or the requirements to dispute and your validation end date. And then below that, it says, what else can you do? If you want the name and address of the original creditor, it gives you that information. It gives you the in this letter, it gives you the CFPB's website. As I said, you don't necessarily have to put the website. I think the rule says you can. You could also maybe put if you wanted to, put the CFPB's address as well. So that's the section for consumer consumer protection section. That's what we call it. Lindsay, can you go to the last part? All right, so this is the consumer response part. This was an area that, you know, I think that especially if you're working in the electronic world, this is kind of, I think, an ineffective way to get consumers to respond. They certainly could print out the form, cut the bottom off and put it in the mail. I don't think many consumers are going to do that. But to the extent that you do send this form by mail or even electronically, you must have these options available to the consumer. They can dispute the debt this way. They want to make a payment, they can do it as well. But you cannot stray from the options as far as disputing the debt. So I would not suggest putting in an additional box that says, tell us in explicit detail why you are disputing the debt. Not a good idea. Don't stray from what the Bureau has here. But this is a mandatory part of the validation notice.
Now, Joanne, we've put up different frames here.
Yeah.
Do you know how many pages this model form is?
It's one page.
Okay.
And in speaking with a lot of clients and associations and industry folks, it's going to be legal. It's not going to be in a letter. It could potentially be, although it's going to be super small. But this is probably going to be a legal sized form. I remember, and you can put, there's options to put some of this on the back. So you can do it as a two-sided form as long as you have information on the front of the page that says there's information on the back of the page. You just have to make sure that none of the information is in the section in the consumer response section. So you can only put stuff on the back in the first like 3/4 of the back. You can't put it on the bottom, because if someone were to cut off the tab, that information would, if they kept the letter, wouldn't be there. This is what the Bureau is saying. It's not my idea.
Sure.
But I remember when New York came around, and all the requirements for New York, I'm seeing similar issues, and it's going to be a lot to try to format this into a standard letter.
Right. Now, would you just prognostication, would you expect the trend to be a lot more towards email with this form, or would you, how do you see that playing out?
I do. As we'll talk about maybe later, there is, the Bureau has said in the optional disclosures that you could put links, you can put hyperlinks, you can put email addresses. So it seems to me, and given there's so much information that has to be packed into, a single letter, email to me seems like the only viable, I mean, first of all, from an economic standpoint, email makes a whole lot of sense. But again, you think about how you're communicating with people anyway nowadays. I mean, you know, who gets mail anymore? I mean, and who reads their mail? Everything is, you know, on your phone, on your computer, and it makes a whole lot of sense to use email in this model form. Remember, the goal of the rules, as we talked about in the prior webinar, is not only developing the consumer experience in something that they've become so accustomed to, but in helping driving consumers to you. And with an email, again, with the hyperlinks and all the things that you can put in the email that they could just click on, get right to a payment portal, get right to a dispute portal, get right to an agency's website. I think the opportunities of using a validation notice electronically are endless, as Jason talked about previously.
Yeah, it makes sense. So you had mentioned before the safe harbor. So this is an important point here. So tell us, you know, what exactly is within the safe harbor and what's outside of it, where companies
what's
can
in the
have
harbor,
exposure.
what's out in the harbor. Yeah.
Yeah.
So the safe harbor provisions in the final rule are very limited. They only provide a safe harbor for the use of the requirements of the validation information, and that the notice was clear and conspicuous. So if you use the model form, you put in all the right information, you do everything that they tell you to do, you have a safe harbor for somebody saying, I didn't understand the form. I don't like the format of your form, or, you know, I don't like the fact that you put interest to the left and it was confusing, or somehow the form was confusing. Mm-hmm. You're safe from that. However, many on the call know when we look at litigation under the FDCPA, especially when it comes to letters, it's usually never about the form. I mean, there are plenty of those cases. It's usually, what does the information say to me? How did it misrepresent that I owed $1,000? I think one of the most serious considerations for those on the call who do legal collections, there's been so much litigation about whether letters from attorney give a false impression of suit or the idea of meaningful involvement. Using a model form doesn't save you from that. Those false, deceptive, and misleading representation or unfair practice claims are alive and well even when you use a model form. So again, it is somewhat limited, but my recommendation has been, and my discussions have been, that the model form and staying as close to those requirements is certainly the way to go. Now, the Bureau has, again, this model form is not mandated. So, you know, for whatever reason, it's not. And the Bureau says you can use a substantially similar form. I don't know what that is. And I don't want to be on the other end to figure it out. Yeah. I don't know. I mean, you could litigate substantially similar for years. So it is, I think it's a dangerous path to go if you really make wholesale changes to what the Bureau has proposed.
Right. So it sounds like the safe harbor is sort of a narrow inlet with a limited number of berths.
That's correct.
And, yeah. And is there any reason why someone would not use the model form? Why wouldn't you?
You know, maybe from an operational standpoint, maybe how they get the information, maybe they think they can lay it out a better way. I mean, I have no idea why that is, you know, and I think time will tell. And at least in the rules and what the Bureau has written about, they have left a lot open for further discussion. And I think that the Bureau is amenable to industry coming back and saying, you know what, I'm trying to put this model form together and I can't. Can we fix this? Can we fix that? I think that this is an organic process. For the moment, this is what we have. Will the validation notice evolve into something else? It very well could be. Very well.
Yeah. As one of my professors first day of law school said, the law is a process. Right. Never ending process.
And we say in Philadelphia, trust the process. So, you know, that's
yeah, that's right. That's right. Anybody who's worked in this compliance area knows it's never settled.
No, it is not.
Continuing perpetual motion process.
Yep.
So Okay, you talked about optional disclosures. Let's get into that.
Yeah, so there's some really good optional disclosures, and there's one that I think is going to be a difficult challenge. So believe it or not, the telephone number of a debt collector is an optional disclosure. I think that's just funny. So, but if I would certainly put it in there. Your reference code, a code that you refer to within your organization regarding the debt, not necessarily the account number, but a collector's ID number you can put in there. Payment disclosures. So you don't have to put into your letter, you can make a payment. I don't know why you wouldn't, but if you want to, you can use one of these two phrases, that you can contact us about payment options, or in the consumer response section, you can say, you can give the consumer an option to make their own payment and say how much it's going to be. So you do have those two options. I'm going to skip over the fourth bullet for a second. You can, as I said, put information about how to communicate with the consumer, with the debt collector electronically, website addresses, email addresses, hyperlinks. I think that is absolutely terrific. And even if you send your validation notice in writing, in a letter, you can still even give those email addresses, especially for dispute. So even though you're sending a written communication, you can encourage the consumer to respond electronically if they have a dispute or if they want to make a payment. So I think that's great. There is the option for Spanish language disclosures, but we talked about in the part 1 of the rule, you need to be really careful with translations, because the requirement, while you are not required to make translations, if you make that commitment and put it in your letters, you have to translate. And not only that, the translation must be accurate. And that's a huge burden for a lot of debt collectors. I want to go back to the fourth bullet point. So I think the Bureau struggled, as we all know, and many on the call know, many states have required disclosures that you have to make, especially in the time-barred debt lane. And so the Bureau is giving you the option to make those state required disclosures. But if you read the rule, they also talk about other disclosures under applicable law. And there is some suggestion that certain court cases relay information that in certain jurisdictions you have to state. I'm not so sure about that. I think that's a slippery slope. I would stick to applicable disclosures to mean those that are mandated by a statute in a particular state or a particular regulator. Like in Colorado, you have to put a certain website address to contact, I think, the Colorado AG or the Colorado administrator. Remember, these are optional. So if there's a court case that you feel, maybe I should disclose how I'm calculating interest, I'd be really careful about that, since it's an optional disclosure, and I don't know whether applicable law requires you to do that. So I just throw that in there.
If we exclude that applicable law optional disclosure, which seems like that's going to take a little more analysis, the other optional disclosures, it seems like, is there any downside to including?
No, especially if the goal is to, again, driving consumers to you and trying to enhance the consumer experience electronically. So any website, any link, anything that connects the consumer to you electronically, put it in there. Don't be shy about it. It's optional.
That's it, right? I mean, the more you can get that customer to reach out to you proactively is the key to all this, right? Consent gets crazy easy when it's the customer's idea.
That's right.
Having the thing that says, call us at 800-123-4567 or text us, give them that option. We talked in the first session about consent is captured if the customer initiates the text. That's how you can begin that communication. This is an easy win on that one. I would always include those digital channels in the model form as optional information.
Absolutely. And make sure, and I think for most on the call, many are already there. I can't stress enough, and Jason, we touched on this a little bit in the last webinar. If you're going to drive consumers to you, make sure you have the right portals, you have the right information, you have a good website, that would make the consumer want to engage with you. I mean, that's a key too. I mean, you can keep driving them, but if your systems and your infrastructure in that respect is not where it should be, it's time to make the investment now.
Great. So time check. We got about 17 minutes left. So let's
Okay.
finish out the validation notice. Let's get through the other elements pretty quickly, and then we can hopefully have time for Jason. We'll have time for you, and then hopefully we'll have time for some Q&A.
Yeah, yeah. Well, these are just some more examples again of putting a website address to dispute. I think you need to go back one. Again, some more optional disclosures that you can put in. Again, these are all found on page 335 of the model rule, and you all can take a look at that. And as Lindsay said, we'll be sending you copies of this slide deck as well.
Go ahead, Joanne. Bureau support, digital channels and communication.
I mean, we talked about, yeah,
Yeah.
I mean, again, as we've said, I think that the Bureau is committed to trying to bring this industry into the 21st century. They're supporting of the electronic transmission of the validation notice, and we can't say enough, take advantage of it within the confines and the structure of what the rule provides. But it would really be beneficial to everybody to use these tools.
Great.
So this, just real quick on this one here, this is just a good example of how in the LiveVox world this works, right? This is incorporating that model form into the electronic delivery. So we've talked about this is going to be a difficult change for some folks, but the simplicity of using a tool to use templated forms makes this a much simpler process to the digital delivery of this. And the nice thing about this is, again, back to empowering your agents with some security and controls, is this gives the agents the power to say, all right, Mr. Mala, I have you on the phone. I'm going to send you a notice of our conversation with all the information you need. And that agent doesn't have any flexibility or control over sending anything but this model form in its entirety the way it's designed to be, right? They don't have the flexibility to go, well, I'm going to change this and this and this. It goes out the way you intend it to every time. So that's why I think this is a really powerful tool to empower your agents and your customers to get that information, but have complete control and trust that it's going out the right way every single time. So I think we can go ahead and hop to the next slide, Lindsay.
I'm going to spend 10, 15 seconds on this. The only thing about time-barred debt is the Bureau reiterated really what they said in part one, is that you can't threaten or take legal action on time-barred debt. That's it. There are no required disclosures. You still have state obligations for time-barred debt, but at the federal level, the Bureau at this point is taking a back seat. The only thing I will say is that if you're in the bankruptcy space, the Bureau did finalize a rule that you can file proofs of claim that are out of stat. That was been decided by the United States Supreme Court. So that's all we really need to know about time-barred debt.
So we talked about a lot of stuff and a lot of changes over not only this webinar, but the previous one where we went over the first section of rulings. So what are you going to do about it? I keep going back to the tools to put guardrails on your agents. And in my opinion, speech analytics is critical to that. So perfect example for what we're talking about today. You have to make sure that your agents aren't saying those things like, oh, well, we're going to sue you, or here comes a lawsuit, or any of those things that you know and trust, you hope they're not saying today, are becoming a much bigger deal because of these now these disclosure notices you have to go out. So you want to hear, are they saying the right things? Are they staying to your brand? Are you hearing those words when you get that first contact? You're going to get a letter in the mail or an email. Are you hearing those important triggers to let you know that your agents are doing their job? And it's an easy way to make sure that significant risks aren't falling through the cracks, right? This isn't a one-off, hey, well, I have one agent that missed a call. This is all of your calls, all of your agents. So on the next slide, I want to talk a little bit about how you do that in a holistic manner. So if you make automated scorecards to do those things that we just talked about, to say, all right, on my right party contacts, I need to score and hear those things. Did I hear consent capture? Did I hear that form's going out? Did I hear that on every single phone call you get a holistic view of every agent, every team, every contact center that's scoring every single one of your customer engagements. It ensures all of these things, not only that we talked about today, but that we talked about on the last webinar. Did I get consent to call them back, even though I've called them 7 times? All of these things are impossible to do if you don't have a speech analytics tool in-house today. So if you don't, I would actively encourage each of you to go look at those opportunities out there now, because they take time and they take time to get really good at. So this is certainly another one of those things you don't want to wait until October to play around with. So Lindsay, let's hop on. I think, yeah, we're wrapping up here, and just a few best practices before we hit on some Q&A. Just to kind of recap what Joanne and Mark went over here. Ensure you're engaging in new due diligence with your vendors, especially validation notices. So making sure they have the information they need, making sure it's in the right format, making sure they're ready to send those validation notices. Sending the validation notice counts as appropriate notification of a debt before credit reporting. So again, I don't know that there's folks on this call that are doing debt parking, but let's make sure that that notification is going out. Joanne is actively encouraging you to avoid straying away from the model form for validation notices to prevent exposure from a liability perspective. Use your disclosures as an opportunity to capture consent and promote your digital channels, and have digital channels in place that empower your agents. That's a big, big deal for all the CFPB rulings. Capture and track your customer opt-ins and opt-outs across your channels with robust consent management. And then lastly, the thing we just touched on, let's use automated scorecards and speech analytics to evaluate 100% of your customer and agent engagements. So with that, let's see if we can go through some resources, and this is going to actually hit a couple of the questions we came up with. And Lindsay's going to send this out after the call today. But one of the questions that came up a few times was, I missed part 1. Can I get that link? So in the resources that Lindsay's going to send out and the links to this webinar, the part 1 will be there if you missed it. So we have a couple minutes. I'm going to find we got a bunch of questions. I tried to answer some as we went along here, but I'll take this one. On average, how long does it take to set up speech analytics? I'm going to give you the LiveVox answer. Takes us a couple weeks to set it up, and it takes you about a month to get really good at it, building scorecards, doing the analysis. The good news is it's tuned. You don't have to do a lot of the heavy lifting on that, but that's the rough answer there. I can't speak for some of the other vendors in the space, but that's the LiveVox answer there. So let me ask this one, Joanne. There's been a couple questions about when do these take effect? Do we have that date yet?
Yes, we do. November 30th, 2021.
So that's great news. Again, I think a lot of the things on this call are going to take months of preparation and collaboration to get in place. So I think these are things that folks should be definitely tackling now. Another question for you, is the form provided an electronic fill-in form, or do they have to recreate it? And I think that really kind of depends on the vendor that you're dealing with, right?
For the non-technology person on the call, I don't know what a fill-in form is.
Let me phrase that a different way. I'm going to answer for you. I think the CFPB is not sending out a quote editable PDF and saying, here it is, just put your name in.
No, they're not. That's not to say that you could probably make it and put form fields in it if you wanted to, but no,
right.
They're not.
But we're not looking to them to say, here it is. Go do it.
They said, do what you got to do.
So there was one more question. I don't know if you're ready to answer this or not, but the question is, how would you handle if an account has multiple debts? So Mark had 5 different Verizon wireless accounts and didn't pay any of them. Would you handle them separately as one entity from that form disclosure notification?
That's a really good question, and it is addressed in the rules. If you have multiple debts, you can, one of the options you can do is to say, see attached or see included, and you can put another form with your validation notice, which itemizes all of your debts. So you can use one validation notice for multiple debts.
Okay, great. That's good news. So Lindsay, I'm going to hand it back to you. Mark and Joanne, as always, your time is incredibly invaluable, and we thank you so much for spending a few minutes with us.
Awesome. Thanks, Jason.
Thank you.
And yes, thank
Thank
you,
you,
Joanne
Jason.
and Mark. Thank you all for joining us today. Like Jason mentioned, and like we mentioned at the top of the call, we will be sending out a copy of this presentation as well as a copy of the recording to all registrants. Thank you all again for joining, and I hope you will join us again next time. Have a great rest of your day.
Thank you.
Thanks, guys.